Hey folks, and welcome to the Pipnotic Symposium for the 30th of September 2020. Today we're going to have a look at how to identify price-sensitive areas. And we've gone over this, I don't know, hundreds and hundreds, if not thousands of times in the past, but we're going to do it from a different perspective because I feel that talking about supply and demand theory, liquidity distribution theory in different ways just helps it resonate with different people. And so, I mean, if you look at this, how price is just moving higher, lower, and then higher yet, I mean, we can get a pretty clear understanding of what price is doing. Despite that fact, it still looks pretty confusing when you see this. And so when you see something like this, essentially what we're trying to do as a trader is we're trying to find price sensitive areas. And you do this by looking for price points, price windows, where price has not yet been. Or you look for price windows where price has been and we had a nice, very rapid distribution of liquidity at that price window. Okay, and you can see we have a few things going on here. And what we can see here is you can see that when price came down to this price point here, we left quickly. When we came down to it again, we left quickly. We came down to it, we left less quickly. Okay, so you can see that from this price point here, there was a keen interest to buy. So if we just mark that area off, you can see it looks something like that. Okay, so this is a pretty interesting price window, and you can see that it's an interesting price window because when price got there, it left very, very quickly. Similarly, above price, we have a similar thing going on where we have this kind of a price point right here where we have price poking into the area, which is this one here, then leaving, price going a little bit deeper, looking for another pancake, leaving, going a little bit deeper, going for the other pancake, leaving, going into that area, going deeper and deeper until eventually it pops through. And so this whole pancake metaphor that I like to use is we have the plate of pancakes here, and each time price pokes into that and takes the pancake on the top of the stack, price is going to have to go deeper and deeper and deeper to get the next pancake. And so eventually there'll be no pancakes left on the plate, and then price will have to look for another plate of pancakes, which we have just up here. You can also see here that this is pretty messy. You can see that price came down, we formed this small period of distribution, price left, it tested it, we went a little bit deeper again, and then we started to break down. Okay, so this is pretty dirty, and so what I like to do is I like to find areas of chaos, and then above or below those areas of chaos, I like to look for areas of order or clarity. And you can see we have, if we don't look at this for a moment, we just focus on what we can see here, you can see that we have a lot of chaos, how price is going up and down and up and down and up and down. And each time price moves up and down like that, I'm just going to draw something where we have a line like this, and then it goes like this. And here we have current price. Actually, I draw it differently, like so. So we have liquidity. This is high liquidity here, a little bit less on both sides. Maybe a little bit more here, a little bit less. And then we have current price. So this is market price, or spot price. Okay, and so price has a very easy time moving around spot price. It can move a little bit higher or a little bit lower, it doesn't matter, but it'll move less frequent to the extreme. So we have high liquidity here, we have low liquidity, and then we have high liquidity. It looks like that. And so price can easily move around here. So here we have a high number of visits, so N, and up here we have fewer visits, so I'm going to put 1 over here. Okay, so price has a very difficult time moving out here, so there's a less, price is visiting the extremes less frequently at the extremes, and more frequently where price currently is. So if we have a look on the price chart, I mean price, when price was here, we could easily move here, we could easily move around here, but we had a very difficult time moving price below here. We had a very difficult time moving price above here. Okay, so if you were to draw it differently, it would look like this. where we have, it would look something like this, where this is price. Price has an easy time moving through here. We have a very difficult time moving here. So here we have N, and here we have 1. Okay, so we have a really difficult time moving price above these highs and below these lows. Okay, and so you view a price chart in the same way. Okay, and so if you look at this, you can see that we have price, we raced north, but we didn't spend a lot of time at that price point. Why? Because price is rarely at this price extreme, and so price starts to move away. We had the same thing happening here, where price came down to this low, we visited it one time, and then we left. Okay, so we have the exact same thing going on. So when you're looking at price through these glasses, you can see that price is going to have a difficult time moving to these extreme price points. And the difficulty as a trader is being patient or sitting on your hands, because you're watching the price chart of an asset, whatever it may be, and you're thinking, I should be doing something. But you can't always be doing something. You also have to be mindful of the fact that you just have to be looking for the most optimal setups and trading them and leaving the rest behind. And so trading anywhere in the middle here is a really bad idea, because what can price do? It can move anywhere in here very easily. The price above the box or below the box has a much easier time moving into it and away. So the high likelihood of price moving, the likelihood of price moving into the extremes and away is higher than inside the box. Price could easily go up here, could easily move up here and just stay up here and then keep going and then come back. Where here, there's a high likelihood that price comes to the extremes and then leaves, comes to the extremes and leaves, and does the same up here. Okay, and we're seeing that currently just here. And so knowing that, what I like to do is I like to mark off something which is called a buy and something is called a sell zone. And the way I do this is I use a line and I look for a mess. Okay, so I look for confusion, chaos, which I can see right here. I can see a lot of chaos here. And then I will take my line and I'll move it. So first of all, I'll put it on the highest high, and then I will also move it on the lowest low. Oops, wrong tool.